Financial Advisor Insights, brought to you by OppenheimerFunds.
The U.S. recovery is far from robust, and even China is slowing. But that doesn't mean investors can't make money. There are pockets of growth out there, and George Evans, CIO Equities at Oppenheimer Funds, is here to tell us where to look. Welcome, George. And tell me, there are a number of themes about growth out there. Yeah. Can you tell me where they are?
Okay. Well, look, the first thing is that people obsess about the macroeconomic environment in which they're investing. This is much less relevant for equities than it is for some other asset classes. And just because growth is slow does not mean that there is an enormous dynamic within the economy. So despite the fact that growth is slow and likely to be slow here and in Europe for the foreseeable future, there are some fantastic long-term growth opportunities. So we've been investing in these long-term themes for quite a few years now. In particular, we like mass affluence, which is based on the emerging consumer, new technologies, and the last one is aging.
Let's take those one by one. The first theme, the growing consumer middle class in emerging markets. Can you delve deeper into that one?
Okay. Well, the first thing is that, everyone is familiar with the fact that we've got an emerging middle class in the developing markets. One of the most important things that people tend to miss is that it is enormous. It is unprecedented in history. So essentially, we have about 6 billion people that live in the developing markets, and an increasing proportion of them, it's estimated about half, are now economically active. So that dwarfs the billion people that live in the developed world. So the size of the emerging market consumer is likely to be something that goes on for a long time. The second point is that often the best way to invest in this theme is through a Western company. Western brands are very highly valued by the emerging market consumer, whether it be basic sort of food and staples, or spirits, or especially luxury goods, which are now over half emerging market consumers contribute to those sales.
The second theme in your so-called mantra is new technologies and the data deluge. Yeah. Can you dig a little bit deeper into that?
Okay. Well, again, despite the fact that we are in this slow growth world, the amount of data that we are generating per year is doubling. And it is likely to continue for the next decade at least. So we have a number of companies whose products or services are benefiting from that doubling of information. So we like companies that deliver the information, the infrastructure companies. We like the companies that help store it. And lastly is the companies that help manage it, because the sheer amount is just overwhelming.
And the third theme is the aging population in developed markets. Yeah. Let's hear about that.
Well, aging population is actually not just a developed market theme. So the whole world is aging quite rapidly. The developing world is aging as well. So there are going to be 3 times as many Chinese people over 65 in 35 years as today. So it's going to go from about 8% of the population to 23%. So we invest in companies that have products that improve the quality of life. So pharmaceutical companies, which many people thought was a great investment in this area, suffering problems of patent cliffs and lack of productivity of their pipeline. We prefer these sort of consumer discretionary products that improve the quality of life. So we have a number of companies in the eye care business, in the hearing aid business, and things like that.
Thank you, George. And thank you for watching The Street. I'm Greg Greenberg.
Financial Advisor Insights, brought to you by OppenheimerFunds.